Hi everyone, let's have a look at my low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the question, is this move to the upside a wave C, A, or a wave 1? Because the moment you get an impulse, you can't just expect continuation to the upside. You always have to think about a potential wave C, after which price is moving to the downside to take this low once more. So in this video, we're going to try and answer this question while running through the different scenarios. The first scenario then is this being a wave C, which then has to be part of an ABC expanding flat, and this expanding flat is then part of a zigzag structure in a 5, 3, and then another 5 wave move to the downside, where the most common target area is wave C over here between 26.7k and 26.5k. And this is a very legit scenario. If we look at the low of this wave B over here, the most common target area for wave B is between the 1.236 and the 1.38, taken from the low to the high over here. However, price closed multiple 30-minute candles below the most common target area, but it did bounce on the 1.618. And the 1.618 is a rare target for an expanding flat wave B. So it is a target nonetheless for this then being a wave C to the upside. Now this wave B is quite long in time, one has to say, compared to this wave A. I mean, if I pull a line over here of wave A and a line of B, I've actually checked it before recording. This wave B is 4 times longer than wave A, which is a little bit like long, but it is still possible. And also something that might support this idea is the CVD divergences, because if we look at the CVD divergences, we have bearish divergences between the high over here and the lower high that has been made, and also locally we can see some bearish divergences. So this is locally, this is the range that we're in right now, and over here we had a high, lower high made, but on the yellow chart we had a higher high on the CVD. Bearish divergence already played out with this wick over here, taking the low in the middle. So that's what you want to see. But then price moved to the upside once again, creating bearish divergences again with this high on the yellow CVD line. So a higher high on CVD, much lower high on price, creating bearish CVDs once again. But those play out on such a low time frame the moment this low is taken. But the bearish, the bigger one, is actually more important for this particular scenario, because then we zoom out and you can see price, lower high on price, but on the yellow CVD line we have a higher CVD. So lower high price, higher high CVD, bearish divergence, and the target for the bearish divergence happens to be the low of B, which then also is inside the most common target area for wave C. So the CVD is quite interesting. Has to be said that if you get a very strong move to the upside in a then bullish environment, then basically what the CVD is showing is market buy. So in this move to the upside, we had many people market buying, and of course that can also be a sign of bullishness, right? That market buying. So in a very impulsive structure, CVD can be leading, where price will eventually follow CVD to the upside, right? So that's something to keep into account. But this scenario is very valid. But for me, the decision will basically be made around this target box. So if price is going to move down through this target box with volume, right? Because this is then a wave C as well. So this has to be an impulsive structure to the downside. So if price moves down like more vertically like this as an impulsive structure with volume going up and moves past this target box over here in the middle between 27k and 27.1k, that is the moment I would be looking for this target box over here. And then yes, this was most likely going to be a wave C. But if we then go to the more bullish scenario, then the low is already in. So in this scenario, we then have an A, a 3-wave B, and then a WXY, before then another 5-wave structure to the downside in a wave C. Now the most common target area for wave C is the white box over here, but as you can see, price did not hit the most common target area for a wave C, which actually doesn't happen very often. A rare target for a wave C is the 0.618, which we have hit, and also have some candles below the 0.618, which is nice, but not hitting the most common target area for a wave C is usually, of course, not something I like to see, because I like the common targets. So over here, what did price do? It basically took the low. So it took the last little bit of liquidity that was left with this candle, moved up, took the low once again before having this big move to the upside, and with the volume as support over here, this might then be the beginning of a wave A or a wave 1. Now how do you then decide if this is a wave A or a wave 1? Well, if we take the fibs from the low of this 5 to the high that we made at the moment, actually let me go to the 15-minute because you can count 5 waves over here in a 1, 2, 3, 4, 5 wave structure. So that is why I take the fib from the low of this 5 over here to then the high, and then I put it on a wave 2. So for a wave 2, the 382 is a rare target. The 0.5 to the 786 fib are common targets, and the 886 is a rare target. But so that is for the scenario being a wave 1, 2, and then 3, 4, 5 for more upside. So the 0.5 is inside the target box, right? That's important to remember. But if this is an ABC scenario and we go to a wave B, then you will see the 382 now changes color. The 382 is a common target. All these fibs, because I just like the 786 and the 886 to be orange and red, but all these fibs are common targets for a wave B. So if price is bouncing on the 382, then it's more likely it's a wave B. If it goes all the way down to the 886, it's more likely that this is an ABC. So we have to wait and see how deep price is gonna go, if it is gonna fall to the downside with the bits of bearish divergences that we have, and of course how impulsive it is gonna be, because again, this area is a very interesting and important support area. We have a daily naked point of control over here, a daily time naked point of control, the 0.5 as I've just shown, and the range point of control. So if I quickly run you through, so this is the range point of control right in the middle over here. Price is now above the range, but as you know from previous videos, the moment price goes in a range, maybe back tests the value area high, moves down, the point of control is the next target. If price moves back in, point of control is the next target, but it is also quite likely you might revisit the value area low. Okay, so it's important to remember, not like, oh, we had a big push to the upside, so I'm going to long over here. It's not, you know, no financial advice, but not a great idea. Always wait for the retracement and look how that retracement is forming. So we have this range point of control over here right in the middle, so that is important. And then we also have the naked point of control, 27.1k, time naked point of control at 27.05 as well. So we have some interesting support besides the daily, by the way, at 27.3k. So this is important support for the decision up or down, right? So you can put this one on your chart as well. We have over here the very bullish scenario, very short, where this is a wave 1, 2, 3, 4, 5. Then we have an ABC correction. Now this being an impulsive structure is very, very awkward because of the wave 2 being much longer as well than wave 4, which is very uncommon. But this would be then the beginning of a wave 1. Then this is the low of wave 2 before then a big 3 to the upside, where again, this wave 2 could be extended to the right, but that's usually not something you like to see. A zigzag being a 5-3-5 wave move is much more common in a wave 2 than any other form of correction. So if price is going to move to the downside and hits this low, it is more likely this is going to be an ABC, like from a probability perspective, than a 1, 2, 3, 4, 5. So that's something to remember as well. And then finally, we have a potential WXY over here. Go to the 1 hour. Where we are looking at this to be a 3-wave structure to the upside, followed then by either this being an ABC 3-wave structure or the 3-wave structure like this for wave X to either finish here or at the daily naked point of control. Would actually be quite nice to hit that daily naked point of control before then upside in a wave Y, which is then a 3-wave structure as well, where these highs are quite interesting at 28.3k for a target, as well as the target box between 28.9k and 29.2k. So that being said, make sure to keep an eye on this target box if price is going to move to the downside for potential support or not. Keep in mind the bearish divergences we have as well. And I hope this video was helpful to you and helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.